Hey everyone, welcome back to the channel. Today, we're diving into one of Latin America's most fascinating economic stories, Chile. For decades, Chile was hailed as the success story of the region, a free market powerhouse that pulled millions out of poverty and became the richest country in South America by GDP per capita. Think of it like the Asian tiger of Latin America back in the 90s. But over the last 20 years, something changed. Growth slowed to a crawl, and Chile got trapped in what's called the middle income trap. Now, with José Antonio Kast's landslide victory in the December 2025 presidential election, there's real talk about a comeback. Could this be the spark Chile needs to rev up its economy again? Let's break it down. First, let's look at the glory days to understand the contrast. From the late 1980s through the 1990s and early 2000s, Chile's economy boomed. Annual GDP growth averaged around 7% in the 90s. That's the kind of explosive expansion we saw in places like South Korea or Taiwan during their miracle years. By 2010, Chile had joined the OECD, the Club of Developed Nations, and its GDP per capita in purchasing power parity terms hit levels comparable to parts of Eastern Europe, around $30,000 today. What drove that? Strong institutions, open trade, low corruption, and a big reliance on exports, especially copper. Chile produces about 28% of the world's copper. That's like if the US dominated oil production even more than it does. Copper prices soared in the 2000s commodity boom, and Chile smartly saved a lot of that windfall in sovereign wealth funds. It was textbook neoliberal success, privatizations, free trade agreements, and fiscal discipline. But starting around 2014, things stalled. Over the past decade, average annual growth has hovered around just 2%, sometimes dipping lower, like 0.2% in 2023 or the contraction during the pandemic. Compare that to the US, which has averaged 2 to 3% in good times, or emerging markets like India hitting 6 to 7%. Chile's productivity growth flatlined. Investment dropped, especially in mining, due to regulatory hurdles and uncertainty. Why the stagnation? A few big factors piled up. The end of the commodity supercycle hurt. Copper prices stabilized after the China-fueled boom. But a lot was homegrown. The 2019 social unrest, massive protests over inequality, pensions, and cost of living, shook confidence. It started with a subway fare hike but exploded into demands for systemic change. Two failed attempts to rewrite the constitution followed, creating years of political instability. Then came the Boric administration from 2022. President Gabriel Boric, a young leftist, pushed ambitious reforms, higher taxes on the wealthy, labor changes, and more public spending. While well-intentioned to address inequality, Chile has one of the highest Gini coefficients in the OECD. These moves increased uncertainty for businesses. Investment permits slowed, especially in mining for lithium and copper, which are crucial for the global green energy transition. Think EVs and batteries. Chile has huge lithium reserves, but projects got bogged down in red tape. The result? Chile fell into that classic middle-income trap, too rich for cheap labor advantages, but not innovative enough to compete with high-tech leaders like the US or Germany. Productivity stagnated, export diversification halted, and growth couldn't break out of low gear. By 2025, projections were for another 2 to 2.5%, solid, but not enough to close the gap with developed economies. Now, fast forward to December 14, 2025. José Antonio Kast, the ultra-conservative candidate from the Republican Party, wins in a landslide. He takes over 58% of the vote in the runoff against the left's Janet Jara, the biggest margin since democracy returned in 1990. Kast, a 59-year-old lawyer and father of 9, campaigned hard on security, crime, and migration, issues that resonated after years of rising concerns. But economically? He's a throwback to Chile's free market roots, admiring the Pinochet-era reforms while promising democratic continuity. Markets loved it. The day after the election, Chilean stocks surged, the IPSA index hit records, and the peso strengthened. Why? Investors see Kast as pro-business. His platform: cut government spending, simplify regulations, attract foreign investment, and provide legal certainty, especially for mining projects. He's talked about lowering corporate taxes, potentially by 10 points, reducing bureaucracy that's choked permits, and fiscal discipline to keep inflation low. Analysts are cautiously optimistic. If Kast delivers, growth could climb back to 3 to 4% annually by boosting mining output. Copper and lithium are booming with global demand for renewables. That would mean more jobs, higher exports, and revenue without big tax hikes. It's similar to what Javier Milei is trying in Argentina: shrink the state, unleash private sector energy. For US viewers, think Reagan-era supply-side economics or Trump's tax cuts, deregulation to spark investment. Chile's already got strong fundamentals, low debt, independent central bank, and rule of law better than most emerging markets. With Kast's focus on order and stability, foreign direct investment could flow back in. But it's not all smooth sailing. Risks are real. Kast doesn't have a majority in Congress, the right gained seats, but it's fragmented. Deep reforms might get watered down through negotiations. Social issues could polarize. Kast's conservative views on topics like abortion or migration might distract from economics. And external shocks, like a global recession or falling copper prices, could hit hard. Still, the initial signals are positive. Kast has moderated some rhetoric post-election, emphasizing unity and pragmatic governance. Outgoing President Boric congratulated him and promised a smooth transition. If Kast prioritizes the economy, fast-tracking mining permits, cutting red tape, and controlling spending, Chile could escape the stagnation trap. Bottom line, after 20 years of slow growth, Chile has the resources, institutions, and now potentially the political will to accelerate again. Kast's win is a bet on free markets reviving the old miracle. Will it work? We'll be watching closely in 2026 and beyond. For American investors eyeing emerging markets, Chile just got a lot more interesting, stable, resource-rich, and tilting pro-business. What do you think? Could Kast pull off an economic turnaround, or will politics get in the way? Drop your thoughts in the comments, like and subscribe for more on global economics, and I'll see you in the next one.